Hey everyone! Welcome back to another episode of Law of the Empire. I'm your host, Reina, and today's episode is super exciting because we have a guest. Gaston is from the London School of Economics and he's currently doing his PhD in international relations. He's studying a super fascinating topic of the investment indices and the impact of financial markets on international relations and international policies, specifically focusing on the global south. I had such an engaging and enlightening conversation with him, and I'm sure you'll all enjoy hearing it. I know I learned a lot, and I'm sure you all will too. So, without further ado, here's Destan. Hi, so could you tell me a bit about yourself, what you do, what your research is on right now?
Yes, definitely. My name is Gaston Bronstering, and I'm a PhD student in the IR department of the LSE. And I am researching, broadly speaking, the influence of current day's financial market practices on policy decisions in the global south. And I'm most interested in passive equity investment and the indices that are being used for that.
That sounds so interesting. So, you mentioned that you are focusing on index providers, right? So, how do you usually explain your research on index providers to someone who's never heard of them before?
Yes, so index providers are companies such as MSCI, S&P Dow Jones, and FTSE Russell. Those are the three biggest ones. They emerged in the 1970s, 80s as information providers to basically provide information on what a specific market is. So when we speak of financial indices, we have different asset classes. So you can differentiate between equities and bonds, and as well as geographies. So for instance, the S&P 500 represents the 500 largest companies listed on the US equity market. And similar indices exist for different countries, different asset classes.
Hmm.
What has happened over the past decades is that due to technological innovations, notably with ETFs, um, that basically leverage financial indices to allocate capital. So we call these passive investment strategies. This form of investment has become ever more important. And now we can say that the majority of um, capital that's being invested is invested via passive strategies, so via index-based investments. On the other hand, active investments describe when there is someone on the fund level deciding what stock or financial security to buy and which one not to buy. So these indices, from being simple information objects and tools, have become much more important. And I'm looking exactly of how the investment behavior that is based on indices also shapes potentially policy decisions.
So, why do you think the indices have become more popular for investments as of late?
That's a good question. They come with two advantages. The first one being that they are diversified. If you have a limited budget and want to invest in stock markets for your retirement or a big project that you have on the long term, you want to spread the risk of your investment. So, for instance, you wouldn't buy stocks of only one company because if that company does not do well, your investment is basically not developing as you wanted and not beneficial to your personal project. So you want to basically spread the risk over a broader category of companies, of markets. And in this case, ETFs and passive mutual funds allow you to do that. And on the other hand, passive investment also comes with the advantage of being a lot less costly. Because if you use an active strategy, someone must basically be employed on the fund level to do these decisions and to manage your investments. On the other hand, for passive strategies, um, it's a passive strategy, so you don't have a fund manager, and therefore your investments are cheaper, and you have less fees that you have to pay for the return that you get.
That's really interesting. So basically, these indices like kind of help lessen the risk because it's a ton of companies instead of just one company that you're like putting your money into.
Exactly. And there's also a big discussion that has been ongoing over the past decades whether active investments perform better than passive investments. And I think we can say that this has been broadly settled that, of course, there are exceptions, that active investments can outperform passive investments, but on average, the passive investments perform better, which
That's
is also,
interesting.
yeah,
So
logical.
how do these indices influence global market financial systems?
Yes. So you have to see that we talked about both active investors as well as passive
Mhm.
investors. And starting with the active investors, their performance is oftentimes benchmarked against passive indices. So if you have a stock trader and their portfolio value increases 10% over, let's say, 5 years, and the S&P 500, for instance, increased for 12 years, you could see that this active investor has not performed as well as the average market. So this is how passive investments hold active traders and investors accountable to a certain extent. On the other hand, you have passive investors that basically follow the development of indices. That means when a country or a company gets included, excluded, the passive investor has to follow. This is how we describe it on the investor level. And going to the country perspective, I think it becomes a bit more difficult because there's country indices, but there's also global indices. These include categories such as the um, MSCI Emerging Market Index, the Frontier Market Index, and the Developed Market Index. You can think of those as ordinal or hierarchical categories where index providers um, put global markets into different categories according to their investability. And basically, the criteria of how easy it is for international investors to access these markets. Um, for a country, it becomes therefore important to be classified as an emerging market rather than a frontier market, because this means that you have automatically more financial inflows into your economy, which reduces the kind of financing cost of the listed companies on your stock exchanges. Yeah, therefore can spur economic growth, but these relationships are not deterministic, and a reclassification must not always be coincidental with an increase in financial inflows. So
Okay.
yeah, that's the basic mechanism.
So as a country has like more economic growth, they could be reclassified from a frontier to an emerging market.
So it is not specifically about economic growth. You have to think of these criteria as representing the ability of international investors to access the market. So it's not about the performance of the economy. Well, in a certain way it is, but it's
Mhm.
not about the development of GDP. It's more about the liquidity in financial markets, as well as for instance, the legal status of foreign investors. If it's as easy for an international investor to access, let's say, the Korean market than for a Korean investor.
Mhm.
Um, there's a multitude of these requirements. So yeah, in the end, it's not only about economic growth, it's these criteria that limit access or not.
Okay, got it. So how do these classifications shape investment flows, borrowing costs, or economic stability?
Um, yes. So as described, based on how you are classified as a country, you
Mhm.
can obtain more or less passive investments. To a small reminder, passive investments is this form of investment that follows benchmark indices, and therefore automatically allocates capital according to index development. Um, Yes, for the financial stability, one could generally say that a country that is more open to international financial flows also is more exposed to the risk of investors suddenly exiting their markets, um, depending on general investor sentiment or also the global financial cycle, which is dictated by monetary policy in the core of the financial system. Yeah.
Okay, so do these index providers act more like neutral data collectors or political actors with real power, do you think?
It's a difficult question to ask because on the one hand, um, yeah, I don't believe that there's anyone with bad intentions on the index provider side. I think these people working in these institutions and companies try to make the best for their clients. What I'm interested is more the kind of structural consequences of the use of indices for investment reasons on the kind of global financial markets on countries and their policy choices. So I think there's a certain way, um, a difficult line between representing markets in the most objective way and also having some kind of room for discretion. And there's discretion in the classification of companies and countries. For instance, in the case of the Russian aggression of Ukraine, MSCI reclassified or basically converted the Russia index to standalone. So the value of all equities was set to zero. And this was something that resulted on the consultation with a few stakeholders. So I guess large asset managers, but not everyone that normally is able to voice their opinion was consulted on this decision. So you must think that index providers have this difficult role to reunite a perspective of legitimacy and accountability, while at the same time being able to yeah, sell products that are effective. Yes, I think this is crucial to understand. It doesn't really mean that nothing can be improved. I think much can be improved, but I also see the difficulty of doing this job correctly.
So what has your research found so far in terms of what you're doing right now?
It's one part of my research, and this is a paper I'm currently working on with three co-authors, where we try to map the global ETF market. So we look at a data set that includes 95% of the global ETF market in 2024 and traces basically the funds and the indices that are used by the funds. Um, and I think that we can clearly, and this is maybe some of the preliminary findings that I can share, that there's a huge concentration both on the sides of the index providers. So we have the already mentioned MSCI, S&P, and FTSE on the index provider side, as well as large asset managers. So you have the usual suspects, BlackRock, Vanguard, and State Street, that hold significant shares amounting to 75% of the global ETF markets on both sides. What we can see beyond this concentration on each side is that they're interconnected. So um, the large index providers are also connected to the large asset managers. And in some contexts, such as in the global markets, this is what I was referring to with respect to frontier, emerging, and developed markets as categories. You can see a specific connection between MSCI and BlackRock. Yes, this is something that we observe empirically, and I think it is quite an important observation because it shows you what kind of coordination is happening in the market around what we see as the ETF market. It's not a bunch of atomistic investors as we supposed previously about financial markets, but it's a structure that is determined by three large actors on both sides of the ETF market.
That sounds fascinating. So, how can a change in the index classification impact the government's policy decisions, do you think?
There's an interesting example for this. In 2015, the Peruvian equity markets had a bit of a slump. The liquidity was very low, so people were not trading a lot. And I think there were two or three companies on the market that basically corresponded to MSCI's liquidity requirements. Um, then one of these companies, I think, went under the criteria, and the minimum threshold of companies that responded to MSCI's liquidity requirements was not met. Therefore, MSCI announced that it would potentially reclassify the Peruvian equity market from the status of emerging market to frontier market. Um, yeah, in other words, if the situation continued to decline in the Peruvian equity market, the country will be reclassified, which means financial outflows. What happened in this concrete case was that the finance minister prepared or flew into New York to the headquarters of MSCI and presented a market liberalization package, um, which then, 1 year later, convinced MSCI to maintain Peru classified as emerging market. This is a very anecdotal piece of evidence and doesn't say much about the general context. But I think what it shows is that index providers and their classifications matter and also influence how governments go about it. So oftentimes you would, something that this event has oftentimes been referred to is the role of the IMF and the World Bank as basically the providers of funding for countries in distress um, that is bound to conditionalities. I think that it's not too much of an exaggeration that today a lot of the financial flows received by countries go through passive mechanisms. Therefore, one would expect that the classification criteria that are underlying those investments and indices shape in a certain way how policymakers relate to it. So a country that is aspiring to a higher classification will take orientation in these classification criteria. Um, and this is what I'm currently trying to find out in my PhD.
That's so fascinating. So basically, I think what you're saying is that index like classifications kind of like have power over countries almost in a sort of way where if a country like doesn't have the monetary policy like they need or like are looking for, they can kind of like say that that country will go from being an emerging country to a frontier country if they don't meet the certain criteria by a certain deadline, kind of ensuring that country kind of moves forward in a sort of way in order to keep their emerging status.
From what I have been looking at in the past months, so I look at documents released by index providers. There were instances where index providers basically announced the conditional reclassification. So if condition one, two, three are not complied with by moment T, the country will be reclassified, which can be interpreted as a kind of, yeah, a condition that is similar to the IMF and the World Bank, but of course very different. And this is also an anecdotal comparison.
Mhm.
But yeah, in a certain way, you can compare those.
So, do countries ever try to influence index providers to improve their classification?
I think the mentioned case of Peru would be an example for a country trying to influence, not in a bad way, but basically to um, yeah, present its policy as it think it is to be perceived and not how it's currently perceived. Um, yeah, I think this is probably the best example to mention on this side. Yeah.
Mhm. Yeah, I totally agree. So, are there examples where index provider decisions have had major consequences for a country or a region?
Mm. Major consequences is also something wide. I would say that in the case of Russia, you could say there has been a strong
Mhm.
consequence, depending on or following MSCI's decision to set the value to zero. Basically, Russian stocks were not tradable anymore. And yeah, but this is not necessarily a decision by MSCI. So they their country reclassifications entail outflows and inflows. This is what I'm currently trying to investigate empirically. Um, but it's also difficult kind of influence, especially in the anticipation. So I would invite you to do a second interview when I'm done with my PhD and to have the concrete results out there.
Okay, got it. So you've worked on sustainable finance, right?
Yes,
Okay, so how do index providers shape climate-related investment?
yes. So on the sustainable finance perspective, there's different goals of what you want when speaking about sustainable finance. One is the internalization of financial or climate-related financial risk. The other would be basically addressing the material risks of climate change. So transforming companies that are currently unsustainable into sustainable companies that don't affect climate anymore. There has been research on basically the link of index providers and ESG criteria. And there, the researchers, which are Fichtner, Jaspers, and Petri 2023, basically found an ESG capital allocation gap. That means that I think, yeah, 95% of the so-called ESG indices don't have a meaningful impact on sustainability. In other words, they are mainly geared towards integrating climate-related financial risk instead of promoting actively more sustainable economic practices. Um, this is one perspective. There have been initiatives on the EU level to build ESG indices, and I think generally this research that I mentioned before does not generally mean that passive investment does not contribute to the green transition, to the transformation of the economic structure, but that in a way, active investments can be much more effective in fueling such change. Because if you think about what is happening in um, the sustainable investment practice, you have the kind of capital allocation, which is one part, but much more importantly, in this case, you also have the engagement mechanism that basically um, fund managers engage with the companies they invest in to steer them in certain ways. This can be done through voting, but also to direct interactions. And this is something that you don't have on the passive side, but can have on the active side. So, yeah, I think probably one would say that active investing can be much more effective, but on the same side, passive investment can be also conducive to
Hmm.
sustainable investment.
Okay, that's interesting. So I feel like you sort of touched on this, but are sustainability focused indices actually driving change or mostly symbolic?
I would um, stick with my last response to basically say that beyond symbolic, they're mostly integrating financial risk.
Mm-hmm.
Um, but could they be more conducive to economic change with respect to climate change? Of course. And it's important to ask the question of what exactly is the index that one follows with their investments. Um, exactly. What is the ambition of the index? What kind of inclusions, exclusions are being done? And I think for people interested in sustainable index-based investment, I would encourage them to look at this with a very detailed and ambitious perspective.
Okay, so I think throughout this entire conversation, we've kind of talked about the power some index providers have and how they can use that power to influence some countries to have a certain monetary policy. So, do you think index providers should be more regulated? And if so, how?
So this is also a quite difficult question.
Hmm.
I think ideally the definition of which countries get included and what companies get included should generally be democratized in the way that more people should have a say in this definition process. At the same time, I also see that the world is getting, is basically distancing itself more and more from what we call the kind of liberal financial order. And there's more and more geopolitical tensions and risk, and countries, don't cooperate as we thought they did in the past. Therefore, it becomes more and more difficult to find common solutions on the global level for economic cooperation and exchange. However, such a thing would be needed. So the question is a bit, who would regulate index providers? Most of index providers and asset managers, those main actor groups that are tied to passive investments, are located in the US. Therefore, it would be, I think, most conducive if the US regulated index providers to a certain extent. But with the current administration, I don't see any hopes for that to be of positive impact for the rest of the world,
Mhm.
if not negative impact. So, I think it's a difficult situation. We can hope for the best, but yeah.
Yeah, totally. So my last question for you is, do you have any books or articles you would recommend to a high schooler or college student interested in this topic?
Yes, for sure. There's one book that I think came out in 2022, but double check this. It's by Brett Christophers, and it's called Our Lives and Their Portfolios, on the topic of asset manager capitalism, basically describing of how the current financial system is shaped by the interests and practices of asset managers and how this impacts us as individuals and societies. Um, Another perspective would be by Benjamin Brown and Brad Christophers. It's an article from 2024 called Asset Manager Capitalism: An Introduction to Its Political Economy and Economic Geography, which basically brings the perspective of private markets and public markets together. And I think is a very well written perspective for someone that is interested to knowing more about that. And finally, my third recommendation is a academic article from 2021 by Petri, Fichtner, and Heemskerk called Steering Capital: The Growing Private Authority of Index Providers in the Age of Passive Asset Management. The latter provides a good overview of the index perspective. Yes,
That sounds really interesting. Thank you so much. I learned so much from our conversation, and I'm sure everyone else listening did too.
thank you very much for having me.
Mhm, of course. Let's all give one big final thanks to Gaston for this amazing episode. I learned so much about the impacts financial markets have on IR and the Global South's policy. I also learned so much about investment indices, and I hope you all did too. If you liked this episode, don't forget to follow Law of the Empire on Instagram and on Spotify. We have new episodes every other Wednesday, so make sure to stay tuned. Thank you all so much for listening, and until next time, I hope you all have a great day, and see you next time. Bye!